Okay guys, welcome to the next video. This one is a continuation of the series that I'm doing on these special purpose acquisition companies. I think this is video number 6 in that particular series. There's a whole playlist. I'll link it up above here so you can check out the rest of them. They're all pretty interesting, I think. I'm having a lot of fun doing these. The analysis is really interesting to learn about the dynamics of these very, very early stage companies. You know, that said, these SPACs are super high risk and high reward, right? So, it's great to get in early stage, but you run the risk of buying a real lemon because the particular business model is attracting some subpar companies that really shouldn't be going to an IPO in the first place. So I think you have to be really, really careful about what you're putting your money into here. So it merits digging in to both the bull case and the bear case to really understand what's going on here. And that's what I want to do in this video. I want to get into exactly that. I've got 5 points on the bull case. I've got 5 points on the bear case. And I'm going to do this for a company called ARVL. They're an EV manufacturer that's doing a reverse merger with one of these SPACs. It's called CIIG Merger Corp. So yeah, I'm going to cover the bear and the bull cases. I've got 5 points to tell you about each one. At the end, I'm going to give you my opinion and let you decide if this is something that you should be buying. Let's get into it. So first up, let's talk about CIIG Merger Corp. That's basically the shell company that's going into ARVL and going to take them public. They did an IPO back in January. They had $750 million in the bank. They issued 5.2 million shares at the typical price of $10. So it gave them a pretty good market cap then to go out and find a target. One thing that's interesting here is that these guys were originally looking for a technology/media company. And that would have been a good fit for them. I think that, the head guys that are in this one, they have a background in media production and that kind of thing. And I think that's originally was their intent. So it's a little bit odd to see them now doing a deal with an EV company. I don't think that was their intention in the beginning. And they don't really have a background in emerging tech or the EV space or automobile manufacturing or delivery or cargo or any of that kind of thing. So it's a little bit weird, but they have managed to strike a deal with ARVL. Pretty plain vanilla deal. Like I said, it's the typical SPAC price of $10. They've got $400 million in PIPE investment in this one. So that's something to look out for. That'll fuel a little bit of sell-off post-merger. So ARVL is way more interesting. They are what I would call a full-stack EV manufacturer. They are focused on the cargo van delivery business and also electric buses. So I like that they have a nice tight focus in that market. They've got 4 different bodies that they're working with, 2 cargo vans, the bus, and then they've got this special smaller platform, kind of mysterious. We don't know exactly what that one is. And like I said, they're a full stack company, right? So they're manufacturing these things. They have their own intellectual property, their own tech, their own designs, and they are planning to implement the full business, right? So all the way from manufacturing, production, sales, service, aftermarket stuff, who knows what, once they actually get into it, they want to do the whole thing, which is a little bit different to some of the competitors out there that are doing a little bit piecemeal. So they're biting off the entire business of EV manufacturing in that commercial medium duty space. So interestingly, ARVL is a unicorn. Prior to this deal, they had a valuation of $3.5 billion, despite having exactly $0 in revenue. They're pre-revenue, as these guys like to say. And this deal would value them at $5.4 billion. Again, all without a single dollar in revenue. You got to love the state of EV companies these days.
What's the upside potential?
Okay, so what do these guys have going for them? Well, point number 1 is they have a really, really key deal with UPS. They have a contract right now for 10,000 EV cargo vans, and UPS has an option for 10,000 more. And this is not your typical early stage letter of intent kind of deal that a lot of these companies are now striking with the major fleet operators. They've been working with UPS since 2016, according to them. So I think if you go back to 2016, that would have been the early stage proof of concept work and trials and learning and all that kind of thing. That seems to be behind them now. And they're actually moving into, or at least very, very close to production. Production is planned for 2021, and they're going to actually deliver some of these 10,000 vehicles into UPS, which is a pretty significant deal. It seems highly unlikely to me that they are not going to exercise that option for another 10,000. Certainly their projections are counting on it, which I think is reasonable. So that's a really, really solid sign. In spite of the fact that they have no revenue coming in the door, they do have a solid deal in place with a major player. I like this product focus. You know, they're really tightly focused on really just two things: buses and cargo vans. They're not trying to do everything in this medium urban commercial duty space the way some of the other players are. I like the focus. I like the technology that's powering that focus on different size bodies with that skateboard frame, the same thing that Canoo is doing. I think it's a really, really good approach to build these vehicles in a modular way. So, and really that's all about the market focus, right? So the market for delivery vans, they're claiming it's 2 million units. Very impressive numbers, very strong growth. They're claiming that the market opportunity on buses is about 131,000 units. If that's the case by 2025, that's a good number as well. They have one customer in the pipeline for buses. It's just a letter of intent, though, so it's hard to say how serious it is. But at least they have a little bit of interest there. The one thing that I do like about that bus opportunity is the total cost of ownership savings that they're putting out there. If that's true, that's really a compelling story to customers that might be looking to buy their buses. If they can really knock the TCO number down that low, maybe they have a real shot at selling into some of these operators that are looking to save a buck on the bus fleet. Point number 3 is an interesting thing that they're doing. Instead of building these massive traditional sorts of vehicle manufacturing plants, these gigafactories, they're going with what they call microfactories, and they are taking a highly roboticized, automation-based approach within these smaller scale microfactories. And the strategy here seems to be, to try to dodge the inevitable cost of having to retool a massive gigafactory. Instead, what they can do is they can create these special purpose microfactories that can be very tightly focused on a single contract or product line or jurisdiction or whatever it is, and really focus in on producing that type of vehicle at the right time in the right area, and then only have to retool that one microfactory for a different purpose. It looks like a way more efficient use of capital than the high-risk strategy of going with a massive plant and then suddenly deciding that you have to retool the whole thing and you don't have the capital to do it. So I really like that strategy. I hadn't really seen that before when I looked into these guys. So I think that's pretty smart. I like what they're doing there. I like that they at least have a path forward to autonomous driving. They don't have their own autonomous tech right now, which I kind of like. I don't like these companies that try to do absolutely everything right out of the gate. But they do seem to be well positioned for this. And I think they need to be, because I think drones are coming to this delivery space that they're trying to play in. So they need a way forward into that. And although they don't come out and say it, I kind of wonder if that's what this smaller body product is intended for. To my mind, when autonomous tech gets to where it needs to be, could that actually be a delivery drone on wheels? That would be pretty cool. They did make some mention of it entering the taxi space. That's pie in the sky. Who knows if that would happen? But at least they are acknowledging that needs to be a path forward into the future. One thing that I kind of like here, and I was surprised to see, is this OEM partnership that they have with Hyundai and Kia. I don't know exactly what's going on there, but I think any of these EV manufacturers have to be very, very scared of the OEMs, right? Because they're bigger and they're slower, but they are going to get here eventually. And so I like the fact that they're at least taking the approach of aligning with a couple of big OEMs to potentially leverage the capabilities that they have that these guys don't, and maybe it's going to protect them from the inevitable competition that's coming from these larger OEMs into the future.
Let's talk about risk.
Okay, so what's up on the bear case? I've got a few things here. Number one right out of the gate is just the fact that they're so early stage and their entire business model is completely unproven. They have to do everything and they have to get it all 100% right. We're talking production, sales, service, reliability, everything. And they're going to have to do this while they're incurring deep, deep R&D losses over the next few years. There is no room for error here. Profitability is a long way away, and every single element of their business model is a big red risk item that could absolutely halt the whole thing. So the fact that they really haven't proven anything here and have not recognized even a single dime of revenue puts them extremely early stage and makes them super high risk. Another key risk item here, and you see this if you look in some of their filings, is that they have not really nailed down their supply chain. How could they? The supply chain doesn't really exist for these kinds of things. And so that's another thing that I think is a real concern. Not only do they have to get that supply chain working, they have to source all of these things, they have to do it reliably, and then they have to incur and manage the risk that their suppliers are taking on, right? So not only are they vulnerable to the competition in this space, their individual suppliers are as well. Are they going to nail down the supply chain only to find that a key supplier encounters their own problems with competition or scaling or time to market or whatever it is? It's kind of like trying to build a boat while you're out in the ocean, right? Are they going to be able to pull that off? Concern number 3 here is that at the end of the day, these guys are just not ready to go public, right? And so I think it's a key example of them using the SPAC model to get that capital injection before they're really ready for it. And I think it's all about capitalizing on the intense interest that's out there in the market for EVs. And I think they're using the SPAC to get into that public equity market before they would otherwise be ready for it. And they really, really want to capitalize on the hype. Nothing wrong with that. If I was in their shoes, I'd be doing the exact same thing. I would look at the market out there and go, holy cow, look at the capital raising opportunity we have if we can actually go out here and get this money injected. Number 4 is competition. You know, there's really no competition out there at the moment in this space because it's so early stage for everybody, but the competition is absolutely coming. There are other players in this space that are taking more of a conversion approach. So, you know, there's some risk that those conversion companies are going to eat their lunch in the short time frame. So these guys have to play the longer game and get out there to the point where EVs are viable and have that deep penetration. In the meantime, there's other players that are going to spring up and be aiming for that same goalpost. And point number 5 is the valuation. You know what? It's sky high at the moment. You know, like I said in the intro, I think this company was originally valued at $3.5 billion pre-deal. The deal brought them to a little over $5 billion. As I record this video, they are trading at $29 a share. That would put them at about $16 billion in terms of valuation. How do you go from 3.5 to 16 with nothing changing, right? That concerns me. Even their own numbers are only talking about $14 billion in revenue in 2024, and that would only happen if everything goes absolutely perfectly, exactly according to plan. That's never the case. There's inevitably going to be delays, and they're going to take their lumps from all kinds of risk and whatnot. So I have a real hard time understanding how, you know, that $29 share price at the moment is even close to reality. Now, of course, the answer is it's speculation, right? People believe that this massive opportunity is coming, and you know they're either speculating or they're willing to pay an enormous premium to get in this early. And now, you know, somebody could be watching this video a year from now and going, "My God, what a moron!" You know, stocks at $200-300 and they could have had it for $30. This is crazy. That could absolutely be the case. I have no way of knowing. But on this one, the risk reward seems really skewed. Okay, so if we sum this one up, I really think it's clear by now that I think the bear case is winning here on balance, and it all has to do with risk. This one is super high risk because these guys are so early stage. They have so many risks ahead of them that are going to need to be mitigated. And the fact that their valuation now is where it is means that you're taking on all of that risk as well if you buy them. So, you know, it could absolutely work out well for you, but it's way too high a risk to my mind. This is maybe something to keep an eye on, and who knows, maybe the share price is going to crater back down to something reasonable, maybe into the $15 mark, and you might be able to score a deal. Given the hype surrounding EVs, I don't think that's going to happen. But at the end of the day, I just can't justify investing in this one. So guys, that's my opinion. I hope it helps. Please consider giving the video a like, hit the subscribe button, ring the bell, and I'll see you on the next one.